Hey everyone, welcome back to Wise Financial Strategies. For those who may not know, my name is Nate. I want you to pause for a second, stop scrolling, and just imagine you're handing over your hard-earned money to the government, and instead of losing it, you're leveraging it. What if paying taxes wasn't a burden but a strategy? That's right. Smart taxpayers use deductions. In the next 10 minutes, I'll show you why paying taxes is your secret weapon for financial growth. Clear examples from the USA and Germany, Deutschland. We're going to cover a real write-off for singles and couples to see how tax optimization compounds over the years, and how you can even invest in real estate using those tax savings. So let's turn this strategy into your payday. Let's go. First, let's shift your mindset. Taxes aren't just payments. They're the reason why we have safe roads and support systems and schools that keep society stable. But here's where it gets exciting. Governments reward smart behavior. They give you deductions for improving your education, your neighborhoods, and investing in smart strategy or systems for the community, or just saving for retirement. So when you optimize your taxes, you're not just complying, you're partnering with the system. That $1,000 saved today, if it's invested wisely, it could become $5,000 or more in 20 years. And that's the real power of paying taxes strategically. Let's start off with singles. So under 35,000 euros or dollars. In the US, making under 35,000 can take the standard deduction, which is about $15,000, which cuts your income in half. Add the earned income tax credit up to about $632, student loans and what have you up to $2,500. You're saving about $2,000 to $3,000 a year. In Germany, about 35,000 euros, about 12,000 euros is tax-free, thanks to what you call in German Grundfreibetrag. Plus, you get a $1,200 employee express lump sum without any receipts, and a 36 euro in insurance allowance. So your effective tax rate stays under 10%, which roughly saves you about 2,000 to 3,000 euros. And this can be directed into an emergency fund or your first investment account or an additional investment account. So we're staying with the singles, but this time with over 35,000 If it's 100,000 dollars, your income, as income rises, so does the opportunity. In the US, if you're over 40,000, you can still claim 15,000 standard deduction. But now you can layer it in optimized perks, state and local taxes, charitable contributions, which is 6% of your income, educational credits, and what have you. In Germany, singles over 35,000 euros can deduct pension contributions under the RURUP scheme, and that's up to 29,000 euros tax deferred. Add 1,000 euros savers allowance on investments, you're freeing up 3,000 to 5,000 euros for your future. Use that to start a small real estate fund in your investment portfolio. And now for you lovebirds, the married couples, under $40,000 or euros. As a married couple, teamwork does pay off literally. In the US, married couples earning $35,000 combined can claim a $30,000 standard deduction, often wiping out all federal tax, and the earned income credit, which jumps to $7,000 with one child, can claim altogether about $4,000 to $6,000 saved per year. And in Germany, you couples around 35,000 euros combined. You benefit from double allowances, 24,000 tax-free, plus childcare deduction, 80%. We're talking about 4,000 to 7,000 euros optimized yearly. And that's great money for family growth. And now for the married couples over 40,000. The higher incomes households, the tax code is an opportunity. In the US, a couple earning over 40,000 or 50K gets a $30,000 deduction, leaving only 20,000 taxable. Add your child tax credit, which is about 2,200 per child, and a few other goodies. We're talking about $5,000 to $8,000 saved. Some of you may be already doing this, but hold tight. And in Deutschland, Germany, it's called splitting. The rule splits the incomes for lower taxes, saving 2,500 euros easily. Couples can deduct 58,500 euros in pension contributions and enjoy 2,000 euros tax-free capital gains, with a 42% top rate kicking in later. That's since 6,000 to 9,000 euros saved annually. And those savings, perfect seed money for real estate investments, turning deductions into bricks and mortar. Now let's connect the dots. What happens when you optimize like this for 20 years, either in America or the USA? This information is not new for a lot of you. We know that you can make money with real estate, right? Real estate has been the winner for many years. I mean, there are still buildings still standing today over hundreds or even thousands of years. Okay, pyramid, whatever. We know, for example, people need homes to live. The government will reward you when you do something sociably by renting out a house, and let your tenants, meter, pay off your home, and then after 20 to 30 years, you pass the real estate to your children or grandchildren, or move in yourself or sell it later. And this is inflation secured. Let's say you save about $3,000 or euros a year on average, and then you invest it on a modest 7% return. It's reality. In 2 decades, you're talking about $140,000. And it may not sound like much today, but if you invested in real estate, you can multiply those gains through rental income, as I mentioned, and property appreciation. In Germany and the US alike, there are programs encouraging first-time ownership with additional tax benefits for mortgage, interest, maintenance, and renovations. You get it? Optimize, save, invest, repeat, baby. And that's how strategy turns into financial independence. As you see here below, success at warstrategies.com. Let's build smarter wealth together. See, taxes aren't your enemy. Ignorance is. Start using your deductions, claim those credits, and watch your wealth grow. Drop a comment in USA or Germany or in between, which tip hits home for you? Like, subscribe, and hit the bell for more insight on wealth building strategies to come. Once again, my name is Nate Warrington. And remember, every tax season can be your next step for financial freedom. I was 12 years in the financial consulting business, no longer in a business, just passing information, and just want people to make their lives better. And that's what Wise and Rich Strategies is all about. So be healthy, take care, and I'll see you by my next video. I'm not sure which one it'll be about, maybe about love, maybe about health. We'll see. Talk to you soon.